Hi, I'm Tom Beers. I'm a Special Research Advisor to the U.S. National Taxpayer Advocate, Nina Olson. I'm pleased to be the moderator of this session, which deals with tax administration strategies for promoting voluntary compliance. Understanding the factors that drive voluntary compliance behavior is of fundamental interest to tax administrations around the world, and it's been the subject of numerous studies by both tax agencies and academics. Current research shows that factors potentially driving compliance behavior include not only the expected likelihood and cost of getting caught cheating, which is euphemistically referred to as economic deterrence, but also compliance norms, trust in government and the tax administration process, the complexity and convenience of complying, and the influence of preparers. In this session, we focus on two of these factors: trust in the tax administrator and trust in the tax administration process. There's a growing body of research, including studies published by my organization, the Taxpayer Advocate Service, showing that trust in the tax administrator and the tax administration process are principal factors motivating taxpayer compliance behavior. So I think we're especially fortunate to have two prominent tax administration officials who will discuss the strategies and approaches their agencies are using to promote voluntary compliance. Our first speaker is Steve Vesperman of the Australian Tax Office. He's Deputy Commissioner, Small Business and Individuals. He oversees the administration of the tax system for three key market segments: small business, individuals, and employers. Leonard Whitberg, our second speaker, is a strategist for the Swedish Tax Agency. He's responsible for strategic development of the tax agency in general and compliance strategies in particular. We are running a little short of time, but hopefully we will have some time for questions at the end of the presentations. So I'd like to turn it over to Steve.
Thank you. Thank you very much, Tom, and good afternoon, ladies and gentlemen. And I'd also like to add my sincere thanks to Nina and the team for putting together such a wonderful program, and recognise what a wonderful venue we're meeting in over the last 2 days as well. And I think it is not too early to say, of course, that it's a very successful program, and lots of dialogue and discussion and some wonderful thinking. When I first received the invitation from Nina to join you in this forum, I shared it with some of my Australian colleagues, and this is a bit of Australian humour. I said I was so pleased to receive the invitation, and they said they grounded me. They said, "Hang on, we're from the tax office. We're pleased to get an invitation from anyone." So anyway, put that into the context. As Tom was saying, we are the voice in this panel of the administrators, and we want to bring together the threads of discussion from the panels from yesterday and today, and look through the eyes of the administrator in terms of what it means in a practical sense, both strategically and operationally. Administrators, by the way, who are trustworthy and powerful in a proportionate sense. So let's hope that that comes across in what we're discussing. First of all, the big picture for administrators internationally. We are dealing with a number of challenges. They are the expectations of the community, of the taxpayer public, in terms of service standards, in terms of maintaining a level playing field, so confidence that everyone is meeting their tax obligations, and of course in terms of taxpayer rights. But in addition to that, almost every administrator is meeting the challenge of funding pressures, and that means sort of a downward pressure on the funds that are available to the agency, but in an environment where we've got increasing taxpayer numbers and an increasing base, and the opportunities that more sophisticated technology presents to us as administrators. But with those opportunities comes threats. And as you heard from the IRS Commissioner yesterday, identity fraud is a real and significant threat for all of us as we are taking advantage of the digital world, the digital technology, and we're using that to change the way we deliver services to the community from a tax administrator's perspective. But other people are using that to their advantage in terms of defrauding the system. So we've just got to be so conscious of that. So I wanted to start off by saying we are moving from a traditional approach to tax administration to a much more contemporary approach. And that contemporary approach is about delivering certainty, real-time certainty for taxpayers in an environment where we are taking into account individual circumstances and where the system itself is giving confidence to the community that everyone is meeting their obligations, but we're doing it in a way which is minimising as much as possible the costs to meet those obligations. So designing a system that delivers those sort of 4 factors is the nirvana for all of us, because once we get there, once we make that happen, then we are going to see, I think, the highest levels of voluntary compliance, minimal cost, huge confidence and trust in the administrator, and people seeing, and Eric's presentation about what happens downstream with the revenue once it's collected is also an element, if you like, of the confidence the taxpayer community have in the administration of the system itself. But I wanted to qualify that by saying, I know it sounds like I've spent some time in the state of Colorado in saying that's the nirvana, but it's a vision we're all working towards, and we're all getting slowly towards that vision using technology and using the outcomes from some of the research we've been talking about and looking at how do we understand what drives compliance behaviour and how can we influence behaviour going forward through the way we administer the system itself. And that's why my paper talks about we're moving from the art of tax administration to understanding what's the sciences behind it. How can we optimise the use of science, both behavioural science and computing science, to really deliver more contemporary tax administration. That's the journey we are all on at the moment, and then some administrations are a fair way down that path and others are just working their way towards it. But the extent to which it's all happening is real, and it's a challenge that's faced every administration. So I just wanted to reflect, first of all, about what does this mean from traditional to contemporary. So if we're saying we're moving from correction to prevention, we're moving from a gotcha environment. You know, we're catching people out, more to how do we give early warnings and compliance assurance through approaches that engages the community and takes them along on that journey in terms of that positive compliance behaviour. How do we move from reticence to providing taxpayers with safe harbours? It was already discussed earlier today about how do we, as a trusted administrator, provide safe harbours that the community see we're doing the right things for everyone, we're getting the right outcomes at the end of the day, not just a bureaucratic approach based on particular processes and procedures which are spelled out in each of our administrations, and people following those procedures slavishly even if they get the wrong outcomes. How do we go from the isolated transaction view to a relationship and a whole-of-client perspective? And I'm going to speak a bit more about this whole-of-client experience and perspective, which is absolutely dovetailing into what we've already talked about a little bit this morning and yesterday. How do we move from risk aversion to risk management, focusing on the material issues and knowing when to let go and when not to? How do we move from that focus on the past to the focus on the future, and shifting from amended assessments and compliance dollars as key measures to a much more understanding of a focus on minimising or reducing the tax gap? And if we do get time, I can share with you how some of our internal effectiveness measures in an organisation and a tax body can shape the engagement approach that our own people take when they're interacting with the community. If we're measuring tax dollars, that translates to one engagement relationship. But if we're measuring more about how do you embrace and engage the community in a way which is helping them, then that takes a different approach. But how does effectiveness measures impact on that, the DNA of an organisation? And the extent to which that shift that we're talking about from that traditional contemporary translates then to building that confidence in trust in the administration of the system that the community see is that they have ownership of that system is a big part of this change. And when I say ownership, it is about if the community accept and recognise that they have a stake in the health of the taxation system, and they can see that the tax administrator is part of that and is promoting that and is engaging that, then we are well and truly on the road to having a joint ownership of the system, which means everyone has a stake in the right outcome at the end of the day. And that's part of the engagement, the client approach we talked about, the influencing behaviour, and the recognition that the tax system is not just from a tax authority's perspective, it's about how do the community own that system, participate in it, and later on I'll talk about and be part of the design of the system where we get the right outcomes using the community as part of the design team of various initiatives. So if you look at what this means in terms of key principles going forward, and this has come out through work that we have done in Australia, but it is not inconsistent with what's happening in other tax administrators. We want to make it easy to comply and difficult not to comply. In Australia, our commissioner, who's been in place now since early 2013, he talked about the 95-5%. Now, they're not sort of strict numbers, but he's saying what he had seen is that we've been designing the system to catch the 5%, which has overlaid a significant compliance costs on the other 95%. So he's saying we should be ensuring we're designing the system for those who are willingly complying, who will voluntarily comply with the system, if you give them the right vehicle for that to occur. So spend your investment dollars on that as much as possible. And then focus on the other 5% more particularly where you understand those individual circumstances. So that's helping with the level playing field equation, but not designing a system to catch the 5% which overlays complexity and costs for the other 95%. And the more we're open and transparent about that, the more the community can see that we're working with them to get the best outcomes from the community's perspective. There's no doubt that the community is saying we are expecting the authority to help us navigate that complexity. We've talked about the complexity already yesterday and today. The authority has a real role in helping navigate that complexity. But in some cases, we overlay our own level of complexity in our administration, which doesn't help at all. And some good examples of that are some of the letters. We heard from, I think it was Alison yesterday, about that letter, that FATCA letter that went to that Canadian resident or citizen, that was quite bureaucratic in terms of the way it was set out. Now, in Australia, our Commissioner has been saying we need to recraft all of the letters that we send out because many of the letters actually add levels of complexity and are hard for taxpayers to understand exactly what we're asking them to do when we're setting the, we're asking them to do something. And I'm going to touch on what some changes that have occurred as a result of that very shortly. So what do we need to do in terms of redesigning the system? A co-designed system which places greater control in the hands of taxpayers, tax practitioners and other intermediaries. So in the past, I think the tax body, the tax authority, has always represented that we know it all, we are in charge, we will design the system and we will administer the system. The more contemporary approach is a much greater inclusive approach of the community, taxpayers, tax practitioners and other intermediaries, by the way. Software developers are a big part of this, financial institutions are a big part of it. The co-designing with those key stakeholders so they have ownership of the system is an important part of the future. In what way can we leverage the data that's now available to all administrations and especially data in accounting systems and through financial institutions so that we can assist taxpayers in meeting their tax obligations in a seamless way? Now, we haven't got a lot of time to go through this in detail, but the extent to which we are working towards, and this is not only in Australia but elsewhere, working towards a system where we tap into accounting systems and financial institution information and we collate the information for a taxpayer in regard to their obligations is a critical, I think, initiative that we're working towards. Because we feel, particularly at the high volume, small micro businesses, where in the past we've been saying, well, how do we help them keep the proper accounting records and complete the forms necessary for the tax office so that we know how much money they owe and they know that. How do we change that around so that when they go about their business every day, when a plumber or an electrician goes about their business every day, in the background, the bookkeeping arrangements are happening seamlessly. There is no need for intervention of a taxpayer because what's going through their accounting system, what's going through the financial institution that they deal with is coming straight through the tax office and obligations are being met. In Australia, there's no doubt we've been talking about how do we optimise the use of the data, both directly from taxpayers but from third parties, in terms of not finding out those taxpayers who are not meeting their obligations. The primary purpose is to help taxpayers through the pre-filling arrangements or at least helping them complete their return information through the use of that data. Now, obviously there's a secondary purpose. We can use that, of course, to identify those taxpayers who may not be meeting their obligations, but we've been first and foremost up front saying this data can be used for pre-filling purposes, for pre-preparing returns. And in fact, we have been doing that in relation to income tax returns for some time now. How can we tailor the experience for taxpayers? Now, in that earlier session, we talked about, I think it was Keith or Scott talked about going to 100 households and collecting the 35 cents for the delivery of the newspaper. And that personal approach is much more effective in understanding the circumstances in that household in terms of their capacity to pay and willingness to pay. And we have, through over time and the large numbers we're dealing with, we've sort of depersonalised that because we've reduced everything to numbers and volumes. But we've got to switch that around. And through the use of data and profiling, we believe we have a much better chance of actually having a holistic understanding of a client profile which allows us to personalise the interaction in every interaction we have. We couldn't do this 5 years ago. Analytics, availability of data and systems is actually providing the opportunity to personalise our interactions with taxpayers so they can see we are looking at their circumstances, their individual circumstances, and what it means to us. We all know ourselves that when we deal with our banks, we have a much greater, much more positive response when we can see that the interaction we have with the bank is at a personal level. We do not have a similar response when it's at a very generic level, when we're dealing with numbers rather than specific individual circumstances. So how do we do that in a way where we're delivering in a fair and respectful manner administration of a system that fosters that natural ownership of the system by the community and by sort of the intermediaries. And the other key factor in the use of the data is the need for that transparency. Now, we have already talked about transparency, but there's another dimension to transparency that I want to share with you. And that is the transparency of the information that the tax authority has about individual taxpayers. So when each administration looks at their risk profiling, for example, of taxpayers, why aren't we making that as transparent as possible so taxpayers can see what is the assessment of risk at that individual taxpayer level that we see ourselves internally, and we can use that to influence behaviour. We have this idea, and we're not there yet, we have this idea for small and individual taxpayers that if they can see how we're using the information that we have collected in terms of assessing their risk profile, and that's transparent to taxpayers, they would look, and then we could give guidance, or how can you change that risk profile? We can influence behaviour that way. So that's a big program for all of us. So I did want to add now the Australian perspective in terms of how we're going about this. I've already added a little bit of detail, but I just wanted to put it in some structure. In Australia, we've got a program now called Reinventing the ATO. It's been underway for over a year, and we did about a year's worth of research, making contact and consulting with a whole range of stakeholders and other and government and intermediaries. And we have a Reinventing the ATO blueprint, which is available on our website, ato.gov.au/reinventing. And it really brings together these threads about that ownership, about that transparency, about the building confidence and trust, and how are we interacting with the community in terms of administration of the system. It picks up that 95% theme that I mentioned before. And that blueprint is designed now to set a forward program about how we are transforming the administration of the system going forward. So it's quite an ambitious program, but we're well and truly working through a whole range of initiatives to deliver that. In that blueprint, it talks about our vision statement, which is that we are to be a leading taxation and superannuation administration known for contemporary service, expertise and integrity. And I heard earlier this morning about that need for that extent of the community hold the administrator in high regard in terms of integrity is an important feature of our program. So the key principles which we're using to design and deliver this transformation of the client and staff experience are easy to get things right, tailored experience, excellent service, fair and respectful treatment, so that's that procedural fairness, that's one of our key design principles, and service delivered in the most effective and efficient way. And we're doing this through three key lenses in this transformation program. One is the client experience lens, which is absolutely consistent with Eric's comments earlier on and Giovanni's comments yesterday. This client experience is essential. The staff experience and the cultural change. They're the three elements: staff, client, and the cultural change. So the client experience is critical, and I'll just share with you from our Commissioner's perspective. As Tom said, I'm the Deputy Commissioner for small business and individual taxpayers. But the Commissioner says, that's an inward-looking title. You're managing people inside the organisation. Your real role is understanding what's the experience, what's the client experience that we are imposing on taxpayers in their interaction with the system. And I want you to focus on what are the positive changes that you are driving which change that experience. And so not only am I now a Deputy Commissioner, but I'm a client experience owner for the small business community, and the Commissioner is measuring my performance based on what I am doing to change that experience. This is critical. Now, I know a lot of organisations talk about client-centric design. We've lifted that up to the next level and said, as an administrator, we got people responsible for understanding that client experience. And there's a number of segments where there are client experience owners in place. Yeah? So that is a critical part of going forward. The staff experience, I'm not going to go into a lot of detail, but in a sense we're saying, how do we change the experience of staff, which is absolutely consistent with the experience of clients, and the cultural change. The DNA of an organisation is critical. So my point before about if we are chasing audit dollars, then the position that people take in chasing audit dollars is a different sort of position than if we're saying what's the right experience for a taxpayer in our engagement. So this engagement and focusing on the bigger picture in terms of the right outcomes, I think, is important. The one thing I wanted to add there is that we mentioned yesterday about university students and high school students getting an understanding of the tax system. One thing we are focusing on is the first interaction with the tax system is the one that leaves an impression on that person on what the tax authority is doing. So if that first interaction is based on a number or just based on a form and not a handheld being held out in terms of engagement, then that sort of perception travels through that person's sort of life in terms of what the tax office is doing. So I'm running out of time. So very quickly, and in my paper, I talk about the strategic program boards. So there are a range of initiatives we've got underway which is changing this experience. And in the paper, you'll see there's an example of a document that says every year counts. Now that's actually a program for small business, and there's one for tax practitioners and one for individual taxpayers that says, how are we changing the experience for you in your interaction with the system? And we are being held accountable to delivering that, because we've got that out in the public domain. But very quickly, and I know I've got 1 minute, our strategic programs of initiatives under contemporary digital services, we've got voice authentication underway at the moment. So I think New Zealand have also got in place voice authentication. Instead of people having to jump through hoops in terms of proving their identity when they call the office, we're now holding voice prints of over 1.5 to 2 million taxpayers, and they can use their mobile device now to prove their identity without the need to provide tax file numbers or other information to prove their identity. We've actually got tools on our ATO app, so we've already released an ATO app, but there's a My Deduction tool which allows people to take a photo of their deduction receipt, which will be uploaded into their either their tax agent's software or into their own self-prepared return form if they want to use a self-prepared return form, so that people are collecting this information during the course of the year and it's available to them. And very quickly, we've also issuing certainty letters. So this is about, someone mentioned before about sleeping at night. We are now saying to a segment of our individual taxpayer base, after they lodge their return, if they are low risk, we send them a certainty letter which says, we will not be reviewing your return. You have satisfied an assessment of the level of risk which is low. We will not be going over your return in relation to this current year. I mean, that's quite a big step forward. And a couple of other things underway. I mentioned about the
Steve, I think we're
profile.
kind of running out of time here.
All right. So in wrapping up, thank you very much. But I will say the administration of the system is no longer an art, it's definitely a science. Thanks very much, everyone.
No, that's okay. You were great. I wish I could have let you run longer.
The remote or the spacebar?
You did.
Okay, then it's me standing here between you and lunch. I will try to be brief, and then maybe we'll have some time for some questions as well. Nice to be here, and thank you, Nina, for inviting me to speak at this conference. I will tell a story about the Swedish Tax Agency. And if you listened to Joachim yesterday, talking about the freedom of information in Sweden, you might think that Sweden is a very strange country. And I will actually add to that impression. Because the story of the Swedish Tax Agency is a story about transformation. We used to be maybe more like we heard today about bureaucratic oppression. But today, the Swedish Tax Agency is one of the most popular government agencies in Sweden. So it's a really big transformation that's maybe taken 15, 20 years. Just to prove this to you, this is numbers about the trust in the Swedish Tax Agency. Before 2006, the trust was quite stable. It's almost the same every year. And after 2006, something changed, and trust increased a lot. Another way to describe this is to pick headlines from newspapers. These are in Swedish, but they are recent headlines. All of them saying something positive about the tax agency.
We believe you.
Here are some of them translated. It is possible to find newspaper articles that are negative as well, but most of them are actually positive about the Swedish Tax Agency. You see, yeah. And it's not because that we are become soft or that people don't think that we are enforcing. As you can see from the first one, the tax agency is successful in finding hidden income. People think it's good that we can find hidden income. And the last one, that Swedes love the tax agency even with the second highest tax burden in the world. How is that possible? That's a lot of people ask that question. We used to have the highest tax burden in the world, but we lost that position to Denmark. So if that's good or bad, I'll let you decide. But to answer this last question, it's actually, well, it's complicated also, but to make it simple, that the taxpayers, the people, they can separate the tax system from the tax agency. And they like us, the tax agency, more than they like the tax system. And people are also more willing to pay tax today than they used to be, shown in this diagram. If possible, I would hide income from taxation. And you can see in the green part, people that say that I would not hide income. And 2006 and previous, it's quite stable, small improvement, but quite stable. But something happens in 2006, and after that, it's a big improvement. And so, what happened in 2006? A lot of things happened, but one thing that happened was that we adopted a new strategy. I won't go through this in detail, but the new strategy focused on the willingness to comply and to build trust. Before 2006, our strategy were more based around deterrence. And all the indicators that we follow to track the outcome, taxpayer behavior, goes, I would say, in the right direction after 2006. As I've shown you on these diagrams, we are also seeing that the tax gap has been decreasing after 2006. We heard yesterday that the people in US are very compliant, that there are very high levels of compliance in US compared to other countries, and I think that's true. And I'm sorry if I'm unpolite, but I claim that the level of compliance is even higher in Sweden. And it's the same in the Nordic countries, I would say. Very high levels of compliance, and the level has increased after 2006. And I cannot claim it's because of our change of strategy. It's impossible to prove that. The only thing that we note is that it's coincide. When we changed strategy, we also saw a change in taxpayer attitude, change in taxpayer behavior. So as a tax administrator, I think that's a good thing. We are moving in the right direction. And the new strategy, as I said, focusing on the willingness to comply and trust. And I will blame most of the things we are doing on Eric Kirchler, because we used his research. And now you are familiar with this model, so I won't go through this either. But what we have been trying to do is to achieve this synergistic climate, to combine trust and power in a way that we can build voluntary compliance, and not to use this antagonistic climate. And I think this research carried out by Eric Kirchner and his colleagues, it's really interesting. It's one of the most interesting pieces of research in recent years in the area of tax compliance. And especially this, that we need to separate different kinds of power. Coercive power or legitimate power. It's not a question whether we should have power or not. It's about how we use the power we have, and that we also need to have enough power. Not too much, not too little, but the right amount of power. And this research, together with other research, says that coercive power reduces trust, reduces the willingness to comply, but legitimate power increases the willingness to comply and increase trust. And when we looked into this in the Swedish Tax Agency, we recently come to the conclusion that this contains a strategic choice. We combined the research by Eric Kirchner and other research, Bruno Frey, for instance, crowding theory, and also research on social norms, personal norms by Michael Wenzel, and research by Valerie Braithwaite and others. And this is our conclusion. We have, or I would say all tax administrations have a strategic choice to make about how to achieve compliance. High level of compliance, that is our goal, and there are two different paths that we can choose. I call them coercion or voluntary compliance. Both can give exactly the same impact on behavior, so both strategies work, but it's about how we want to achieve this and how we want to motivate people. Coercion, it's about coercive power that destroys trust, destroys the willingness to comply, and deterrence is the purpose. That is the intimidation. People doing the right thing because they are afraid of the tax administration. And it can work. The other way, voluntary compliance, is legitimate enforcement that builds trust and that builds willingness to comply. And the purpose of working with enforcement is to support social norms. And this leads to increased willingness to comply and better compliance. I should explain also that I see it's exactly as Eric Kirchler said. Enforcement is very important. Audits and fines. We need to work with that. It's necessary. So it's not a question about choosing enforcement or not enforcement. This is a question about choosing with what purpose are we going to use enforcement and how are we going to work with enforcement. So the left path, I don't use the word coercion, but of course you can argue that it is about coercion. It's not voluntary whether you have to pay tax or not. Of course you have to pay tax, and if you don't do it, you will get punished. So in that sense, it is about coercion. But what I'm talking about is how do we use this, and with what purpose, and what kind of behavior do we want? We don't want the taxpayer to pay tax because he or she is afraid. We don't want to coerce the taxpayer. So that's why I choose the word voluntary compliance in that path. And coercion is about intimidation, about making people comply by saying you must comply or otherwise something terrible will happen. Yesterday, I think in the first panel, I heard something very interesting. And it was, I think it was Joe Thorndike said that we need to go beyond compliance and talk about consent instead. I think that's really great. And he also said that fear is the enemy of consent. So that's a very good expression. I think I will steal that. Sorry, I will borrow it. But that's really the key. And what I'm saying, that we cannot do both at the same time. We cannot use deterrence at the same time as we build a willingness to comply. So that's why this is a strategic choice. We cannot build willingness to comply at the same time as we destroy it. We cannot build trust at the same time as we destroy it. So it's a very important strategic choice. And about how we work with enforcement, not if we're going to do it, but how and with what purpose. And to be able to do that, to build this willingness to comply, we need to be a credible enforcer with the purpose, as Eric Kirchler described, to protect people, not to intimidate people. But we need power, legitimate power, to build this. I will skip this slide and talk a little bit, very quickly, about a study that we did in the Swedish Tax Agency. We asked taxpayers that we had audited, how has your trust in the tax agency changed after the audit? Has it increased or decreased? And it was about the same number of taxpayers. 20% said the trust had increased, 20% said the trust had decreased. But then we asked taxpayers, why has your trust increased after an audit? And here are the answers. Most taxpayers said that the trust increased because I was treated with respect. We had a good dialogue. The tax officer listened to me. And that's the reason why the trust increased. When we asked the same question, when people said the trust had decreased, it was exactly the same answer. They said that trust had decreased because we did not have a good dialogue. The tax officer did not listen to me. I was not treated with respect. These was the most common answers. We also checked if there were any correlation between the size of the reassessment and the change in trust. There was no correlation whatsoever. So it's not the outcome of these audits that affects trust. It is how we do it. And you know this, of course, because it's all about procedural justice. And this is extremely important. It's something that we work very much with within the Swedish Tax Agency to explain this to all of our staff, that we need to work with procedural justice. That is about how we do things. We need to do things right. We ourselves, of course, need to comply with the law and regulations, but that's not enough. We want to build trust, and we want people to perceive procedural justice or procedural fairness. And the only way to achieve that is, of course, that we do the right things, but that's not enough. We need to add this component about how we treat taxpayers. We need to treat taxpayers with respect, listen to them, and explain things in a way that they can understand. We heard yesterday about letting people tell their story, and that is really important. We don't have to agree, but we need to listen to this, to people's stories. And then we can have this sense of procedural justice. And that leads to trust, and vice versa. Trust and fairness are two sides of the same coin. So we know that when people trust us, they perceive a high level of procedural fairness, and if they perceive procedural fairness, they tend to trust us. So this is something that we work with very much, how we treat taxpayers. And we are saying that we must treat all taxpayers with respect. Also taxpayers that we put in jail or whatever we do. We do the things we must do, but always treating the taxpayer with respect. And this means that the purpose of what we're doing is try to protect honest behavior, protect fair competition. And legitimate power is about not seeing the taxpayer as the enemy, but placing the tax administration and the taxpayers on the same side. And we've been working with this for many years now, and it's still not perfect. We will continue to work with this. And we realized we need to work with this all the time to instill these values in our employees. And I think that is really important for a tax administrator to achieve this, to protect taxpayers' rights. We don't have a taxpayer advocate in Sweden. We don't have a taxpayer bill of rights. But we believe that taxpayers' rights are very important, and that is our job as a tax administration to do this, and that we want to have that ingrained in all our day-to-day activities. I think I'm running out of time. Yes?
Actually, no, but we are kind of out of time.
Yes, I know. No problem. I just have one more slide. I won't comment on that one. It's just a quote that I like. Thank you.
Okay, so it's 12:51, and we're supposed to be back at 2 o'clock. Do we have any time for questions? Okay. Well, I'm going to usurp my position as the moderator to ask the first question. There seems to be a growing emphasis on automating interactions with taxpayers, especially through the internet. How does your agency strike a balance between automated and personal services? And what impact, if any, do you believe that the increasing use of automated services has on the views of taxpayers of the tax administrator and the tax administration process? So I'll ask that to both of you.
Yes, thank you. First, I would say it's not a question about balance necessarily. It's about providing good service to the taxpayers. And we can do that through automated means, e-services. But we also need, of course, face-to-face meetings and phone meetings. And if we have looked into the research about this, and we can say that if we have good digital services, that will lead to more trust in the tax administration. But bad digital services will lead to less trust. So that's really important, that we can provide digital services that people perceive to be helpful. We have not totally succeeded to do that in the Swedish Tax Agency. We have been focusing on first to make the e-services good from a technical point of view. So they are working very well. But we have noticed that people are using the digital services and then they call us or visit us. Or they go into the website to check some information and then call us, I read this on the website, is it true? And we say yes, and they say thank you.
So you answer the phone?
Yes, we do. So this is a problem that a lot of tax administration are facing actually. We invest a lot of money in digital services, hoping that fewer people will call us, a few people will visit us, but that doesn't happen. So we have cost in both ways, both in the IT investments and the service. So we need to, and that's what we're trying to do now, to make sure that the digital services meet the needs and requirements of the taxpayers. They not only need concrete answer or to be able to file a tax return. They want certainty. They want confirmation. They want feedback. And if we can build that into the digital service as well, then we think that we can reduce the number of phone calls and meetings. Because we, as everybody else, we need to be more cost effective. So we want to reduce the number of phone calls that we receive and a number of visitors, but not by locking the door or not answering the phones. I think that is the wrong way of doing it. We want to do it in such a way that people don't need to call us or they don't need to visit us. And to achieve that, we need to figure out why do they call us, why do they come and visit us, and then we can take care of the real problem, so they don't need to call us, and then we can reduce the number of staff that we use for that purpose. And one thing that we have figured out through the research is actually people are calling us because we make a lot of mistakes, or we are not clear, or we are not fast enough. So people are calling us, what is happening with this and this? I've not received my money, where are they? Or we send them a letter, and they call us, I don't understand this. So we can prevent a lot of these calls by actually doing our job properly. So that is the strategy we are working on now. Yeah.
Very briefly, support everything Leonard's saying there, and the approach we are working towards is that we wanted the transformation to, or the transition to digital services to be demand-driven. So it's exactly what Leonard's saying. If you deliver something which people have confidence in and can see it's adding real value, so the value proposition's there, then that will, increase the level of demand on that particular service, recognising that we are managing a generational change. So today's students and graduates are going to be much more comfortable with the digital sort of world than say, those of the older generation. So we are managing that generational change. I will say, though, we are imposing, if you like, electronic interchange on those corporates, large corporates, who've got the resources to do that. So we're actually seeing differences between what we're asking large corporates to do in terms of their digital and electronic interaction, and individuals and small businesses who not necessarily have the means nor can see the value proposition in doing that until we demonstrate that value proposition.
So I guess we're going to make time for at least a few questions.
Hi. Marty Davidoff, Paperboy, 1964 to 1969. Gentlemen, fantastic stuff. Doing small business accounting in the background, I mean, that's the biggest problem here in the United States, and actually answering the phone all the time. What a concept. The question I have for you is, both of you, is penalties. In the United States, penalties can be up to 50% just for the late filing and late payment of taxes. And my question is, and here in the United States, it's very difficult to get penalty abatement. What is your philosophy about penalty abatement? Let's restrict it kind of late filing and late payment tax returns. And what is your penalty abatement systems? Thank you.
We're doing a rethink on penalties at the moment, and it gets back to how do you use the penalty regime and tailor the application of penalties to influence behaviour. So the one-size-fits-all just doesn't work in a sense, and that's where you have very strict rules, and irrespective of the circumstances, you apply those rules, and then you're always resolving issues downstream. So we're about saying, how do you actually, and we're not there yet, but the thinking is about how do you develop a penalty regime which takes into account individual circumstances and which influences behaviour. So if someone, for the first time after a 10-year record of lodging things on time, misses lodging on time by a week or 2 weeks, why don't we automatically say we are not going to impose a penalty because of your fantastic credit history, your return history? But the next person who's lodged late every year for the last 10 years, the application of the penalty is such that we say, because of your poor lodgement history, here's the penalty that's being applied. So this is about behavioural economics and the nudge theory. I know we talked a bit about nudge theory, but it's really trying to tailor a response based on circumstances and influencing forward behaviour. And whilst we're not there yet with the actual application of that thinking, that's the thinking that's currently underway in the organisation.
Mm-hmm. Yeah. I would say it's a question about fairness, and this is of course tricky because it needs to be fair both for the individual and also for the system as a whole, and that can be different things. So yes, penalties are necessary, and we use them, and for late filing, and also for if you don't deliver correct tax returns. The rules in Sweden has changed in recent years, so we have a little bit more discretionary powers to actually remove the penalty. I think that's a good thing, but it should be in a limited way. So otherwise, we compromise the fairness of the system as a whole. I can give you one example relating to the panel we heard this morning about the discretionary powers of tax administration. That some years ago, just for the tax return filing season for private individuals, we had a problem with our call center, so people couldn't call us at the last day. And that's a problem. And then we said that we won't fine anyone that are 1 day late with their tax returns. And that was very well received by the public. And you can argue, did we have the legal power to do that? No, not really. But we have, but we have the enforcement discretionary, so we can say that we won't actually impose a fine. So that is what we did, and it worked.
Great, thanks a lot. I guess I'm going to have to cut off the questions at this point. Probably everyone would like to eat. So I just want to thank our panelists for a couple of outstanding presentations.